Hello and welcome to my take on your Daily 5 for the 1st of October. My name is Julius de Kempenaer and it is my turn to host today's show. For those of you who don't know me, I am a senior analyst here at StockCharts.com and the creator of Relative Rotation Graphs, or RRGs as they are commonly referred to. You can find my contributions in the RRG blog on the site. And when you would like to be kept in the loop on everything that has to do with sector rotation and relative strength, please do not forget to subscribe. The link is below every article. Every Tuesday, I host the Sector Spotlight Show from 10:30 to 11 a.m. Eastern. Again, if anything related to sector rotation and relative strength has your interest, please tune in or watch the replays on the StockCharts YouTube channel. I do like the interaction with viewers and readers, so if you have anything to say, please do so in the comment section below. But for now, let's start what we are here for, and that is looking at some interesting charts. The first chart I want to share with you comes from my seasonality spreadsheet, which, by the way, I am happy to share with you. If you just drop me an email, I'll send you a copy for your own use. What this chart shows you is the number of months over the last 20 years where a sector outperformed the S&P 500 or SPY. And this month, so the coming month for October, there are actually four interesting sectors. Because I'm looking at either very high or very low numbers. If there are high numbers, the odds are in favor of that sector outperforming the coming month. If the numbers are very low, the odds are for that sector to underperform the coming month. So what we see here is that there are actually two sectors, and the one is energy at 37%. So that means that over 60% of the time, energy has been underperforming in the month of October. And the second one is healthcare at 32%, which means that in 68, almost 70% of the cases, healthcare has been underperforming the S&P 500. Now on the upside, we have communication services, which almost 60% of the time has been outperforming the S&P 500. And the winner, again, I was almost going to say, is technology, that in almost 80% of the months of October has outperformed the S&P 500. Now, if we attach some numbers, some performance numbers to this chart, we can do a similar chart with the out and underperformance numbers. And there we see that the expected performance numbers are really aligning with the out and underperformance percentages. So energy on average is underperforming the S&P 500 with 90 basis points. And so is the healthcare sector with 90 basis points. Now, communication services, XLC, is actually in general outperforming the S&P 500 with 1.3%. And here also in terms of performance, technology in general outperforms the S&P 500 in October by over 2%, 2.2%. Now what I want to do is bring this into perspective using an RRG and the price charts that belong to that. So we have the RRG on the left-hand side and the individual price charts on the right-hand side. And I have limited the sectors on the RRG to the four that we are focusing on right now. And those are XLK, XLC, XLE, and XLV. So technology, communication services, energy, and healthcare. And the tail is about 26 weeks. That's about half a year. Now, let's start with the most obvious one, and that's energy. And those of you who have been following me on Sector Spotlight and my blogs, energy is really, for a long time already, the weakest sector out there. We had a massive run up, but that has come to an end and it has stayed on the left-hand side, and there is no improvement in sight. You see that rollover, that return here going back into the lagging quadrant. And if we look at energy on the price chart, we see that the downtrend in price is still intact. We recently, a couple of weeks ago, broke below this recent low, which basically confirms that downtrend in price. We've got that falling trend line that still very much putting price under pressure. And we have a similar picture on the relative strength line, which is sending us a message of lower highs and lower lows, and very recently breaking to new lows there, which is confirmed by the RRG lines, which are heading lower. We had a very short hiccup, and that was the hiccup here with that rotation through improving and rolling over, and now both are heading lower again inside the lagging quadrant. So energy definitely fits the seasonal expectation of an underperformance for the month of October. If we go to healthcare, and that tail is right here, we've also seen that roll over, and it's now heading into the lagging quadrant, not necessarily losing a lot of momentum just like the energy sector, but it's still moving to the left. And what we see here is a sector that is attempting to break out, but it's only barely hanging on there. It's not really aggressively rising further. And that is translated into a relative strength line that is showing lower highs and lower lows. It's in a range, but still moving lower. And it's actually pushing the RRG lines lower. So the RS ratio is still clearly pushing lower. We had a hiccup of momentum. That's the little move up that you see on the tail here. And it looks as if it's already rolling over again, which means that we would get a higher momentum way below the 100 level, pushing RS ratio further down and the tail further into the lagging quadrant. Now, if we move to the communication services sector, then we see a relative strength line that has broken out to the upside. It failed to continue higher, so that's a little bit of a caveat there. Momentum is flat. RS ratio is rolling over, heading a little bit lower, but the price is holding up above the previous resistance, now support area, which is basically following the expectations. And you see that the tail here is much shorter than it was for the big red ones, which gives XLC still the option of rolling back up and continuing its outperformance. And the clear winner is technology. If you look at the tail here, it's the shortest tail, which means that it's a very stable trend, which is still intact. And if we would scroll back and forth, you see that it has already started to curl up during this week's price action. And if we look at the price chart, we will see that unlike communication services, technology has put in a new low, which is much higher than the previous high, which is a strong thing. And also the rhythm of higher highs and higher lows here in the relative strength line is ongoing, very high RS ratio level. It is just a matter of picking up of momentum before this sector will line up for another strong month going into October. And this concludes your Daily 5. Thank you for watching. I hope you enjoyed the presentation, and if you did, you know what to do. For now, please stay safe and be careful with your investments, and I hope to see you soon.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.